Hey, good afternoon, BiggerPockets Live, family and friends. Good afternoon, YouTube Live. Good afternoon, Facebook Live. So glad to be here with you. I'm Paul Moore with BiggerPockets and Wellings Capital. And before I go on, I want to make sure you can hear me. I think that would be probably a good idea if you can hear me. So, hey, Matthew Lyden, great to have you. Hey, Hunter. Hey, US CRE Capital. Tell me if you can hear me. And if you like what we're doing here at BiggerPockets and you don't want to see me fired, hopefully you'll give us a thumbs up, a like, a share, something like that. Hey, Will Trade, can you hear me? Okay, want to be absolutely sure? Yes. Okay, great. Hey, Tu Fang, good to see you again. Hey, Jason Long. Okay, so what we're going to do today is we're going to talk about moving on up, making the shift from residential to commercial real estate investing. And so before we do, I'm going to give you all a chance to come on, get situated, and we're going to rock and roll in a few minutes. Hey, Antonio. Hey, Natalie. Good to see you. And thank you. Thank you for your kind words. So give us a thumbs up, a like, a share, a smiley face, whatever y'all folks do on whatever platform you're on. Hey, before we get going, I am going to give you some bad news. There are a bunch of reasons not to invest in real estate, commercial or residential, and I'm going to give you 10 reasons not to invest in real estate. While I'm doing this, if you could kindly tell me where you're from and in one little phrase, tell me what you're doing right now. Hey, Marcus. Hey, Antonio. Tell me what you're doing, where you're from, and we're going to cover how to jump up from residential to commercial real estate. 10 reasons not to invest in any real estate, though. Number one, your life savings is also your emergency fund. You need immediate access to every cent of it at every moment. Number two reason not to invest in real estate, you prefer buying gold because you plan to be a pirate someday. Arrgh. Number three reason not to invest in real estate, you'd rather spend money on a fancy car that will be worth more in 10 years than it is today. Oh, wait. Number four, real estate investing has too much jargon. You'd rather die than have to learn new terminology. Number six reason, what's leverage again? Number seven, you're too busy mining cryptocurrency. Number eight, you want your paycheck to be the only income you generate. What? Number nine reason not to invest in real estate, you like seeing the red and green arrow on stock tickers. Number 10 reason not to invest in any real estate, you don't believe in diversification. And a bonus, you don't want anything to do with that thing called cash flow. Okay, hey, I'm so glad you're here. Hope you know we're having a little fun here. Trying to have some fun here on a beautiful Thursday. Hey, Andrew from Florida. Hey, Belvin, Mohammed. So glad you're here. Hey, Colin. So we're going to talk about moving on up, making the switch from residential to commercial real estate. You know, a lot of investors have a sense that they want to be involved in commercial real estate. I know that I did for years. And I was confused on how to get involved or who to trust. And I didn't know where to turn. And so when I decided to finally start investing in commercial real estate, I realized that we really needed to have people we could trust, and we needed to vet sponsors. And so I realized a lot of you feel the same way. And so what we've done, my company has put together a fund that allows people to invest with us, and then we turn around and invest with these great sponsors. But I realize a lot of you want to be involved in real estate. You have your nose to the grind. So I'm going to talk to you about what would be involved in getting into, like I said, into commercial real estate level. Now, so the goal here is bigger than just passive income from real estate investments. The goal is for you to create true wealth. What is true wealth? So the question is important, because a lot of people would think it's having a big fancy car, having a really nice house or a mansion, having vacations all the time. The problem with these things is they are assets, but they're often assets of someone else, and that is the bank. Okay? True wealth, in my definition, is income that produces assets. It's a simple equation. And so this equation, it basically means you have to have, did I say income that produces assets? Nate Shields, why didn't you correct me? Hey, my friend Nate Shields is on here. True wealth is assets that produce income, okay? So if you have assets that produce income and grow in value, I would say that you have true wealth. Now, the problem with residential real estate investing, I know I'm going to step on a lot of your toes out there, is that even if you improved a house, let's say you had a $300,000 house, and you were able to add a lot of upgrades, finish the basement, finish the attic, build it out, add gold-plated fixtures, you put $500,000 in it, now you've got $800,000 in this house. If it's in a $300,000 neighborhood, you're never going to get your $800,000 back out of it. You're limited by comparables. You're limited by what investors and appraisers called comps. Okay? But commercial real estate is totally different. Commercial real estate is driven by a value formula. And if you're going to write down anything at all, this is a writer downer. Okay? The commercial real estate value formula is this. The value is the net operating income divided by the cap rate. Okay? In other words, it is the income that the asset produces divided by the rate of return. Okay? And so that is the beauty of commercial real estate. If you can drive up the net operating income, and there's lots of ways to do that, or if you can compress or drive down the cap rate, you can actually dramatically force appreciation in your real estate asset. And if you can force appreciation with some safe leverage, you can even multiply your returns even further. So let's talk about the components of this. The value formula for commercial real estate, again, is net operating income divided by cap rate. The net operating income is the gross revenue minus the operating expenses. But it doesn't include, it does not include your debt service. It does not include your mortgage payments, okay? So it's the gross revenue minus the operating expenses. That's the net operating income. Now the cap rate is the capitalization rate. And the capitalization rate typically in the past has been, like 9, 10, 11%. But recently it's compressed dramatically because of the popularity of real estate. Did you know most of the Forbes 400 invests in commercial real estate? And that's where cap rate is most useful. They invest because it's so dang profitable. And the wealthiest people on earth can do this. Institutionals can do this. Pension plans, life insurance plans can do it. But typically, most individual investors have assumed they couldn't get involved in commercial real estate. The great news is, because of the Jobs Act of 2012, syndications in commercial real estate have exploded, and there's lots of access points for you to get involved. And so when we started investing in commercial real estate, we understood this value formula. So we were looking for operators who knew a lot about driving up that net operating income and compressing the cap rate. Okay? So I'm going to give you a couple examples. One is a self-storage facility we invested in. It's in Colorado. And this self-storage facility had about 700 units. It was about 70,000 square feet. It had a mom and pop operator, and the mom and pop operator, he was, let's say, a little disturbed, kind of neurotic. This was his baby. He had nursed this self-storage facility for many, many years, probably decades, and he was really nervous about letting it go. He would call my friend who was acquiring that at like 4 a.m, all nervous, asking questions, asking for financial planning help. He was a hot mess, and my friend, with this great acquisition strategy, was willing and able to walk him through this. Now, when my friend got in last November, and like I said, we invested with him on this, I'm so glad we did, it had delinquency of 80%. Yeah, I'm serious. People to the tune of 80% of the people weren't paying on time or maybe not paying at all, okay? And so he was able to get that down in 6 months between November and May to 5%. That's a normal delinquency, by the way. Occupancy was at 80% as well, oddly enough. He was able to get it up to a full level of about 92%, which most people consider that full in self-storage. He also added a showroom and sold locks, boxes, tape, and scissors. He also put a nice fencing and lighting and gates up and made it a lot more pretty and secure. Really importantly, he added U-Haul. And I'm going to talk to you about that for a second. U-Haul is a policy and procedures change. He didn't have to invest any capital. He didn't have to build any buildings. He just had to allocate a little bit of parking space out front to these U-Haul trucks. Now he makes, just 6 months later, he was making $3,900 a month from U-Haul. Okay. Now $3,900 a month is $46,800 per year. Now let's use our value formula. If the value is the net operating income divided by the cap rate, the $46,800 per year divided by about 7% cap rate, that's 0.07, is a $668,000 increase in value. Now think about that. He just added U-Haul, which was a policy and procedure change. And he added $668,000, on paper at least, to the value of his facility. Well, my friends, he took the net operating income up in 6 months from $295,000 when he bought it to about $457,000. The value at the same cap rate, and that means without any compression in cap rate, which he probably could get, but the value was $4.3 million when he bought it. He added $2.3 million to the value in 6 months. That's $6.6 million value. I'm looking at my notes here. The cash on cash return has skyrocketed to 21% average return. The equity in this is really powerful. Now he got a 65% loan, which means he only borrowed $1.5 million or so to buy this $4.3 million facility. That equity, the bankers didn't get any share of this upside. That equity that was $1.5 million has grown by the full $2.3 million, on paper at least, up to $3.8 million. So while the asset has appreciated 53% in the first 6 months, the equity, the investors' dollars grew by 150% in 6 months. So if you invested $100,000, it should be, at least on paper, worth $250,000 just 6 months later. My friends, this is the power of commercial real estate, and this is why so many people want to do it. By the way, if he could decrease or compress the cap rate from 7% to 5.5% and sell it to an institutional buyer, which he probably could, 7 down to 5.5 is about a 20 or 21% increase in the asset value. And with the leverage he had, that's over a 50% increase in the equity, actually over 60% increase in the value of the equity. That 60% is on top of the 150% he's already grown the value of the equity. Powerful, right? Let's talk about, oh, by the way, so if you would like to get a special report that I did on self-storage investing, it's right here. And you can get this free special report by checking out my BiggerPockets profile. Again, I'm Paul Moore with wellingscapital.com. If you want this free special report, you can go to my BiggerPockets profile. You could also go to my website, wellingscapital.com/resources to get that report. We could send you the electronic version if you like. Now let's take an example of mobile home park investing. Now, one of the investments we invested in was a mobile home park, and I'm going to use some rounded numbers here. Let's just say that the operator paid $5 million for it, okay? And let's say he borrowed, we'll trade how to compress the cap rate. Yeah, basically what we do is you can sell to an institutional investor, somebody who's willing to pay a premium for it because it's stabilized. That's the simple answer. So for a mobile home park, let's say he paid $5 million for it. Let's say he got $3 million in debt plus $2 million in equity. So $3 million debt, $2 million in equity, $5 million. Now, he went in and he said, there's a lot of cars around here. There's 3, 4, 5 cars in front of some of these mobile homes. There's also work trucks, work trailers, RVs. I tried to not sneeze, but I had to do it. Sorry, Nate. Anyway, there was RVs and boats and all this stuff sitting around this mobile home park, and it wasn't very attractive. Well, he wanted to improve the park, and he also wanted to make a little extra money. So he paved an acre out front that he owned, and he put a nice gate, a nice fence, and he said, look, if you've got a third or fourth or fifth car and a mobile home or a boat or a work trailer or RV, you've got to park it in here, and we're going to charge you. Now he's going out on Craigslist to the community and he's saying, hey, we've got boat storage, we've got RV storage. He's charging people, and when it's filled up, that'll be about $10,000 a month in additional rent. That sounds good. It doesn't sound like, incredible, but wait till you hear this. So that $10,000 increase in rent is $120,000 a year in increased net operating income. Divide that by a cap rate of, let's say, 6%, 0.06. 120,000 by 0.06 is $2 million increase. Like I said, the bankers don't get their hands on any of this. This is all the property of the equity holders. Well, the equity holders in this deal already had $2 million invested on day one. Well, their $2 million just went to $4 million. It doubled just by this one change. And that was before filling up more mobile home sites. That was before raising the rent up to market rate. That was before renting a lot of things to tenants that they could use. So there are lots of great ways to increase the value of a commercial asset. Those are two examples. Apartments have tons of examples as well. Now, a lot of people have come to me and said, hey, that sounds well and good, but how do I get in? Well, there are 7 paths to getting involved in commercial real estate. I'm going to go over them really quickly. And if anybody wants to hear more, please raise your hand on YouTube, Facebook, or BiggerPockets and tell me, hey, I want to hear more about that particular path. And if we have time, we'll answer those questions. Now, the 7 paths to commercial real estate investing success. The first one is Brandon Turner calls it stacking. That's when you buy a property, you improve it, rent it out, sell it for a profit, take that profit plus principal and go buy a bigger one. Do the same thing, rinse and repeat, do it again, and you keep going up. I know a guy who started with $1,000 down payment on a duplex, and his last sale that I know of was over $11 million apartment. So that's stacking. It's a long, hard road, but it is possible. The second way is being a deal finder. If you have access to deals, or if you're a good marketer, or if you have an uncle in the business, or if you know brokers, and you can be a deal finder, go tell a syndicator, hey, I'd like to find deals for you, and I'd like you to teach me the business. As part of that, I'll find the deals. I'll bring you the deals. I don't want a commission. I just want a slice of the deal. You can typically ask for 5% or maybe even 10% of the general partnership. Now, similarly, path number 3 is you could be a capital raiser. A capital raiser means you're raising capital for these deals and you don't want to get paid a commission. That's illegal according to the SEC. You want to get a piece of the deal, or you want to become a general partner in their deal. There's lots of legalities to the capital raiser. The 4th path is go big. If you made a ton of money in cryptocurrency, or if you made a lot of money from the lottery or an inheritance, or if you're an NFL player and you want to go big, get a team around you and just jump in at a big level. I wouldn't start small and work your way up in that case. Number 5 path is get a job. And you say, Paul, I don't want a job. I came to BiggerPockets because I wanted to get out of my job. Well, you can get a job as a commercial real estate lender, like a broker. You can also, a mortgage broker. You can also become a real estate broker in the commercial space. You could become a property manager. You could go to work for an asset manager. See, by doing these things, you get your feet wet, you get to know people, you get to know how to run the numbers, and you can maybe find a future partner. So getting a job is not a bad idea. A subset of that is getting a college degree in real estate investing. The most famous realtor in the world, Gary Keller from Keller Williams, got into real estate that way. Another large player in the multifamily field, Rick Graff, Graf, great guy. I met him twice. He actually got in as far as through the job route by being a porter at a multifamily property, and he worked his way up. Number 6 path is find a mentor. Like you can find a paid coach or a mentor. This would be basically the paid coach route would be paying somebody about, let's say, $10, $20, $30,000, maybe more. But you let them be your coach. They walk you through all the ropes for a year or two, and then sometimes they'll partner with you on a deal. A mentor is where you go into someone's office and you say, hey, I'd like to work for you. I'll work for you for free. I know how to do SEO or Google AdWords or Python or one of these software programs, or you're really good at beating the bushes or just being an errand guy or girl, and then trying to learn the business that way. And if you become really valuable to them, they'll probably start paying you at some point. Okay, the 7th path to commercial real estate investing success is go passive. Now, going passive means you take a lot of time to vet a sponsor. You really look at them very carefully. You make sure they're everything that you believe they are, somebody you want to invest with, and then you give them money and you let them invest it for you. And a lot of investors love this path. And to those out there who make a lot of money and they're thinking about getting involved in real estate, but they realize they're beating their head against the wall every spare weekend, evening, vacation moment. They realize, why am I working harder than I need to make less than I could? And so a lot of them decide to take the passive path, and I am all for that. So we started this presentation by saying, what is true wealth? Well, true wealth, again, is assets that produce income. And I propose that being involved in commercial real estate is the best way to get there. Okay, now I also have a special report. I mentioned the self-storage special report. I also have a special report on mobile home park investing. Okay, so here you go, mobile home park investing. This includes a lot of information on how to evaluate mobile home parks and how to get involved. If you want a copy of either one of these special reports, reach out to me on my BiggerPockets profile and we'll send it to you, or just contact us at wellingscapital.com/resources. There's no pitch in these. This is just lots of good information. BiggerPockets is big on not pitching, and I'm trying not to pitch, folks. So anyway, all right, here's what I'm going to do. I'm going to get a quick drink of coffee. Again, Nate Shields is Dude Real Estate over here on YouTube. If you have questions, he'll be answering a lot of your questions. I'll do the best I can. If you haven't got your question answered, please copy and paste it back in, because here we are 23 minutes in. I haven't answered more than 1 or 2 questions yet. And so Darren Huang says, isn't cap rate dictated by market? How would one compress it? That's a great question. It's dictated by the market, the asset, and the time, the point in time. Okay, it's possible to compress the cap rate by selling to an institutional investor. Institutional investors don't want a lot of hassle. They don't want a lot of pain. They want it to be very predictable and stabilized. And if you can sell to an institutional investor, you can sometimes find that the cap rate is squeezed down from, let's say, 7 or 8% where you bought it to maybe 5 or 6%. That's a huge increase in the value of the asset and the equity. And it's not always possible, but it is possible to do. Hey, Sean Everson, welcome back. Hey, Liz Payne, Mark Fagan, sorry. Daniel Brown says, I think being a deal finder sounds like a great path for me. So Daniel, if you want to be a deal finder, it's sort of like being a commercial broker. You're trying to put together deals with investors or equity or syndicators. And it's a great path to go, especially right now. Actually, right now, it's especially hard. It's a great time to learn how to do that right now. It's going to be a lot easier to do it when the market cools off. If you want more information, you can reach out to us. I've just written a book that's going to be published by BiggerPockets, and it includes these 7 chapters on these 7 paths. Jeremy Bravo says, how do you analyze a self-storage site? Is that in your report? Yes, Jeremy, it's in my special report, but I'll give you a quick heads up on that. You want it to be on a main road, of course. You want to have high visibility on that road. You want a vehicle count of, let's say, 10,000 cars a day or more. And if it's in a really busy area, urban area, you might want 20 or 30,000 cars a day. You also, and this is really important, you want to go to a website. I think I mentioned the website in my special report. And you want to analyze whether there is, you want to see about 7 square feet of self-storage or less for every man, woman, and child in any given radius. And the radius should be something like 3 miles in a normal suburban setting, maybe 1 mile in a dense urban setting, or maybe 4, 5, 6 miles, even 10 miles in a really rural area. But I wouldn't recommend going out into a rural area. So that's how you investigate a self-storage site you want to build or invest in. Hey, John Riley, welcome. Hey, Kelly Lyndon Parker, is self-storage saturated? Yes, all real estate is local. And the real estate market in any given asset class in any given time might be saturated or oversaturated in a certain location. That's why it's really important to find a self-storage operator or syndicator that knows these deals, these issues, and does not invest in an area that's oversaturated. But there are many places, like certain places in Nashville and Boise, Idaho, that are saturated. Okay? Hey, Jeremy, main road, high visibility, cars per day, square feet of storage, and a radius. Thank you. That's nice. Hey, Chris Bennett, I love self-storage as well. Thanks, Lewis. Wow, that's so nice of you. Tell my boss. Peace Miska says, how saturated is the market in Dubai? Any idea? I'm guessing that the market in Dubai is not saturated. Did you know 85 or 90% of self-storage facilities in the U.S., about 53,000, of the self-storage facilities in the world are in the U.S., 53,000. A lot of the other percentages in Canada and virtually zero around the rest of the world. So is there an opportunity in these other locations? Well, it seems like a high-risk thing because you'd be introducing an entirely new concept to places like Dubai. I hope that helps. Hey, Justin, what's the most creative way you or someone you know of have increased NOI? Yeah, I think that, putting that parking lot in and charging for vehicles there is my favorite NOI increase method. Another way for self-storage is to take a parking area or area of grass and build a beautiful new climate-controlled facility and storage, climate-controlled self-storage and showroom. And if you can do that out toward the road, that's the best way to do it. Danny says, any advice for an 18-year-old who's getting into real estate? Yeah, I would consider, now this is a complete departure from what I've been talking about, I would consider doing lease option sandwiches or rent-to-own sandwiches. You'll have to Google that. I don't know any books on this. BiggerPockets has some of the best real estate books on the planet, but I'm not sure any of the books cover that concept. Chris Bennett says, I logged in. Where's the self-storage guide you briefly mentioned, or was it a book? Yeah, if you're at wellingscapital.com, just go wellingscapital.com/resources to get a copy of these. Just go to the resources /resources. It's not offered on the website. These are brand new, and so I'm just relaying how to do that. Thank you, Darren. Thanks for saying that. Lauren says, I'm currently looking at a vacant property that's ideal for mixed use in an opportunity zone. This is a new space for me, and I need help. So who can help Lauren? It's a vacant property that's ideal for mixed use in an opportunity zone. Lauren, I will tell you that my advice would be partner with somebody who knows, who's been doing this before and who knows how to develop mixed use. That's my best advice. ADR Event says, when's the release of your new book? I have not told that yet. You'll have to ask BiggerPockets. I'm guessing the self-storage book or the book on self-storage is going to come out in between April and July of 2020. Publishers have a publishing schedule, and I think we're queued up for about 9 months out. Jennifer says, we're trying to move from 2-unit multifamilies into 4 to 6 unit multifamilies. We're buying cash. It would like to do cash out refi as we did before. Anything we need to consider with larger commercial property refi? Jennifer, I can't think of anything. I mean, it sounds like you've already got it dialed in. I don't really know anything else to tell you. No, I mean, you're going to have to go from a residential loan up to a commercial loan, when you get 5 units or higher on multifamily. So when you go up to a commercial loan, there'll be some differences. It'll be a recourse loan. Your goal, Jennifer, is to get eventually to a non-recourse loan level. And that is my advice on that. So Tu Fang I think you're from Minneapolis, St. Paul, right, Tu? I think I met you there. Do you have an audio version of The Perfect Investment Book? Yes, I do. You can go to Amazon.com and get an audio or Kindle version of The Perfect Investment, which is my book on multifamily. Ronnie Boy says, I'm looking to find a 30 to 40 unit multifamily in my city, but there's nothing for sale. How do I find a good deal? Any tips? Ronnie, I hate to burst your bubble. It's a really hard time to buy multifamily, and I don't know of any good deals in any large or small town in the U.S. I'm so sorry. Hate to give you that bad news. But Ronnie, there's going to come a day if you conserve capital and get all your ducks in a row when there will be deals. In fact, there'll be deals coming back from the bank. Zachary says, everyone web scraping. That's how to get leads. Need help with it? Let me know. I get lists of leads for free from probate, expired, divorce, records, obituaries, etc. My friend Zachary has a company in, I think it's Palm Beach, Florida. His name's Chad Corbett. He's one of the smartest guys I've ever met, and he does that systematically. But if you don't work for his company, maybe folks can reach out to Zachary Young to get some web scraping help. Ryan says, how can we know what period the real estate market's in? Yeah, Warren Buffett and some of my other heroes like Howard Marks, Ray Dalio say, we don't know where we are we don't know when the market's going to turn. We can just act appropriately in the moment we are in real estate. And that's all we can really do is act appropriately at the moment. We can see that margins are very tight. People are paying literally record amounts for real estate. And So all we can do is act appropriately where we are. Nobody can know when the market's going to turn and how bad it will be. Chris Bennett says, do you look for existing facilities or do you development as well? Yeah, we do both. We have a growth fund that invests in a few development deals. We're doing one around Tu Fang's area in Minneapolis. But generally we do existing deals and try to, improve them, do a lot of value add. Ken, thank you for your kind words. How do you calculate the cap rates? You just have to ask a lot of brokers around the community, ask mortgage companies, ask appraisers, and you can do that. There's also some online resources for the larger cities. I think the top 75 cities are listed in this company's website. I think it's called IRR, Integra Realty Resources. I think they report cap rates for the top 75 cities. If you want to tell me a city and an asset class right now, Ken, I can take a guess, and it would only be a guess at what the cap rate might be. So again, tell me the asset class and the city, and maybe somebody else on here could answer. By the way, there's a lot of wonderful, brilliant people on here. And so you guys feel free to answer each other's questions. I would be happy for you to do that. Dude Real Estate answers a lot of questions that I never get a chance to get to. Ian Jack says, what do you think of rain in Canada? Can you explain that a little bit more? I'm not sure how to answer that. Ken says it's Newark, New Jersey. What's the asset class? Like, is it apartments or what? Will says this great information. Thank you for taking your time out of your day for us. Yeah, I'm so honored to be here, folks. I get to do this, and that's amazing, and I'm really, really grateful. So thank you, really. Ken Lewis says it's a 30 unit asking $3 million. So here's the deal. That's obviously $100,000 per unit. Ken, okay, it's apartment. The way to calculate it is get the net operating income, and that's the annual income. That's the gross receipts minus all the operating expenses, not including the mortgage payment, okay, and not including capital projects. So it's the gross revenue minus the operating expenses is the net operating income. Okay? Divide the net operating income by the sales price, which is 30 million. And again, that's dividing the NOI divided by the value, in other words, the sales price, 3 million, and that will give you the cap rate. It may be in the range in Newark, New Jersey of 4.5% to 5%, I would guess. That's my guess. Check it out and let me know. Ronnie Boy says, what do you think about investing in upstate New York, Buffalo, Syracuse, or Rochester? Ronnie, here's what I'd say. The same thing that Nate Shields, Dude Real Estate, would say about investing in Chicago. If there's a net population migration that's negative, in other words, if people are leaving the area, it's honestly a questionable place to invest. I don't know if I would do it. You're welcome, Ken. Peter Wade says, have you noticed a compression of cap rates when grouping together commercial properties for sale as a portfolio for a larger number of units? You know what? I don't do this, Peter, but I'm so happy to answer your question with a picture. We absolutely do believe that that is the case, and I can tell you for sure that if you can group together a lot of similar assets that are professionally run, you can likely get a portfolio premium. Unfortunately, I cannot find my graph that shows that. There it is. Okay, I don't know if this will show up, but portfolio premium. 3 assets in a portfolio is more valuable than 3 assets individually. Okay? So that's in my special report. I'd love to have you get our special report to learn more. It worked. Okay, is 8.5% a cap rate? It could be. Yeah, it could be a cap rate. Chris Bennett says, where are you hunting for self-storage? Are you looking for 40,000 square foot and larger? Yes. So you can put a third-party manager in place, or does your firm manage? Chris, you're right on. You know something about self-storage. Hand to Chris here. That's about the size we want to be at a minimum to get a property manager. We don't manage. In fact, we don't. My company is a third party. We pool together investors and we invest as a group in these wonderful commercial real estate deals like self-storage and mobile home parks. Ryan says, is flipping houses dangerous in this market? Yeah, Ryan, it's probably most dangerous in really volatile markets like California, Florida, Nevada, Arizona, and Northwest North Dakota. Because there's such huge swings in value. And so if you buy and then the market drops, a lot of people in 2007 and 8 lost everything. Rod Cleef, he's been on my podcast. I have a podcast called How to Lose Money. It's at howtolosemoney.com. And you can actually, a lot of people like Rod Cleef gained $30 million in their appreciation of their single family homes in like 06 and maybe 07, and then in 08 his net worth dropped 50 million. Okay, so it can be dangerous, but if you get enough margin of safety, as Warren Buffett talks about, you can likely do pretty well. 661 Rick says, how do you calculate the cap rate? That report is not on my website, but these free special reports can be obtained by going to my BiggerPockets profile. Again, I'm Paul Moore with Wellings Capital, and our website's wellingscapital.com. How do you calculate the cap rate? The cap rate is the return divided by the value. So if you have $100,000 in net operating income, okay, and the value of the property is $2 million, you take $100,000 divided by $2 million, and that is the cap rate. That's 5% cap rate. Sire says, does Warren Buffett own Clayton Homes? Yes, Berkshire Hathaway owns Clayton Homes. Chris Bennett, I knew you had a background in self-storage. Awesome, man. Okay. Warren Buffett also owns 21st Mortgage, which is the largest individual mobile home investor or lender that I know of. He also owns Berkadia, or at least in part, and Berkadia Mortgage does a lot of these large commercial deals. My mobile home park investing book talks about Sam Zell and Warren Buffett and their involvement in commercial real estate, specifically mobile home parks. Alan Leon says, what's the process to redevelop a commercial lot of 2 units into a 4-story apartment? Yeah, Alan, the first thing you're going to do is go down to the city or planning or county planning and zoning department and start having conversations with their planners and see if it's zoned right, see what the process is to get it rezoned or to get an exception to the zoning. Alan, and then like I said earlier on the show, I'd recommend partnering with somebody who has years and years, maybe decades of experience in this exact thing. I hope that helps. Giggity Goo. Hello, Giggity Goo. You were on last week. Thank you for joining us again. Would you rather own multifamily properties or sell them to a 1031 into a larger multifamily? Would you rather own multifamily? I like commercial multifamily. My whole book called The Perfect Investment is all a big pitch for I see it, owning a lot of smaller residential multifamily or one big commercial. I'd absolutely own one big commercial if I could. Lauren Providence says, what do you think about investing in real estate opportunity zones? I absolutely love that. The time's ticking, folks. The clock's ticking, and it's going to be hard to find opportunity zone deals a year or two from now. So if you're going to do it soon. Peace says, are mobile home parks only for regions with cooler climates? So what's the alternative for them in hot regions? Okay, so Peace, there are mobile home parks in South Texas, and there are mobile home parks in northern North Dakota and Minnesota and Upper Peninsula of Michigan. I just invested in an Upper Peninsula of Michigan mobile home park. So you guys are awesome. Thank you so much for coming back, and thank you for being awake with me on these forums. It's kind of fun. Hope I'm not putting you to sleep. Giggity Goo says, well, you always give me a good reason to come back. Keep it up, Paul. You are so kind. Alex G says, is it better to do a refi cash out or a HELOC to buy your second rental? What's the advantage other than not having another loan to pay back? What should I look for? Thanks. Is it better to do a refi cash out or HELOC? I think it's the same thing. I don't really know that there is... I would highly recommend, by the way, folks, if you can get a first loan that's a HELOC, you do it. You can keep it paid down by keep plowing your paycheck and doing other things like that. So get a HELOC if you can, get a home equity line of credit or a refi cash out. Either one, I think, is about equal. Robert Smith says, hello, I would like to do a wholesale large multifamily deal. How do I raise the money for the deposit? Well, that's a good question. You probably need to figure out a way to do that. You might want to get a hard money lender involved if you're sure you can flip it quickly, Robert. I think that's what I would do, or get a friends or family to help you raise the money. If you can, flip it so quickly that you get the buyer to pay the down payment. Try to get the ultimate buyer to make the down payment. How old were you when you started in real estate? Thanks, Ronnie. I was about 35, and I'm 55 now. I know I don't look a day over 40. That's what you're thinking. You guys are making me blush. Come on. Seriously, I'm kidding. But I was 35 or so when I started, maybe 36. Ryan says, I've already checked them out, Mr. Dude Real Estate. Okay, 3D Board Gamer says, recently I found out my local county will accept HM loans for the houses. Is that a good way to get started? I am so sorry. What's an HM loan? I don't know all the acronyms, and I'm going so fast here. Sometimes I don't know. I don't remember all the acronyms. I guarantee I don't know that one. Ken Lewis says, last time you spoke about a green energy grant to attach to an FHA loan. Yeah, you can do that. There is, I don't know about the FHA loan part, Ken, but there's actually loans. You can reach out to me about my friend in Toledo, Ohio, and also Dayton, Ohio, who did a green energy grant. I actually did a green energy grant for my multifamily. Somebody asked me if I own multifamily. I missed that question earlier. Yes, we own multifamily, and we did a green energy thing that actually gave us a great break on the, it actually gave us 20 basis point or 2.20 percent, 0.2% savings on our lender, on our interest rate on our loan. I'm sorry, I'm trying to multitask by reading the next question and answering. Brandon says, Sioux Falls, South Dakota is a growing Midwest community. What commercial asset would you recommend investing in, or how would you get some local data? I have a brother who's a real estate agent. Okay, so Brandon, I would go to try to find go type in self-storage and look for holes in the map. Look for places in the map where there's very few or very small self-storages and try to develop, or maybe even take a Kmart or a Shopco or an old building of 30, 40,000 square feet or more and try to convert it into a self-storage facility. Ken, what's my email? Okay, I don't share it a whole lot, but you can go to my BiggerPockets profile to get it, or you can email info@wellingscapital.com. That's info at WELLINGS capital.com. Someone asked, what's your favorite read on house hacking or something similar? Nate, can you answer that? I think you're more qualified to answer that than me. I think it's probably the Brandon Turner books, and some of his articles with the BRRRR strategy. There's a new book on the BRRRR strategy, BRRRR. And you can learn a lot there. So, Swift Jersey says, hey, first time. Thanks for joining. Do you recommend getting a home equity loan on a paid off duplex to purchase another property? Absolutely. Great idea, Swift. I have nothing else to add to that. Nate might. Sergio says, is it possible to assign a something SFR, single family rental, to a back-end buyer using a conventional mortgage loan? Is it possible to contract to a back-end buyer using a conventional mortgage loan? Sergio, can you explain that question a little more? I want to make sure I answer your actual question, not what I'm guessing. Is it viable to start real estate investing at 40? Sonali, I just wrote an article on this. It says, if you're over 40, read this before you start real estate investing. Again, I'm Paul Moore. You can look up my article. It came out just a week ago. Okay, Craig Kurlop's book, says Nate, is the best book on house hacking. Thank you. Bobby Guzman says, what are the best ways to utilize your equity in commercial real estate? Like a HELOC on residential properties. Yeah, you can refinance your real estate just like a HELOC, home equity line of credit, on a residential home, and I highly recommend that you do that. Fua LT says, hello, I'm currently renting with my husband and son. Should I buy our first home or rental property? What is a better financial decision? I don't really have an answer for you. I think most people would be better served by renting and or maybe house hacking. But I don't have an absolute answer for everybody at all times. It depends on prices, what you can get it for. It depends on the rent to price, home price ratio in your market. That's important. Laura says, is it better to negotiate your HELOC at the top of the market or the bottom, or does that even matter? I don't think it matters because the interest rate's floating, Laura. Alan says, where to find a construction loan to redevelop an apartment building and what are the requirements? I would go to maybe Sabal, S-A-B-A-L. They have some loans for apartments, and they have small balance loans. You can also check out Live Oak Bank. They do a lot of self-storage loans. They're very aggressive on SBA, Small Business Administration loans. Okay, Sergio, is it possible to make an assignment of a contract in a single-family rental to a back-end buyer who's using a conventional mortgage loan? Yeah, I think so. Absolutely. I wouldn't see why not, Sergio. Okay, I'm going to get a drink of coffee here, and I'm going to go into our last 10 minutes, the fire round. I don't say it like those guys. Anyway, fire off your questions. If I didn't get to your question, I'm not going to unless you copy and paste it back in. So I'm going to get a drink of coffee and I'm going to find out whose questions are left. I'm going to be answering really quick from here out. Okay. Andrew says, would you recommend a beginner investor to start with the BRRR process, which is buy, rehab, rent out, refinance, repeat? I'm currently saving up for my first property, which will be a rental, and use FHA loan with house hacking. Yes, Andrew, I would recommend that you do that. I mean, you've got it nailed. I can tell, Andrew, that you have been on BiggerPockets for a while because that's exactly what I would consider doing. Thank you, Ken Lewis. Okay, yeah, Nate Shields, dude, real estate is in agreement. Nate, how's the weather up in Madison, Wisconsin? Aren't you guys getting like a foot of snow tonight? What's going on up there? So is there any other questions? Like I said, I will not go back up through the list. There's hundreds of questions on the YouTube side here. There's well over 100. And so I'm not going to get back to all those. So please copy and paste your question again. Today we've been talking about commercial real estate. Somebody just asked me, 3D board gamer, I'm going to see if Dude Real Estate can answer you. Someone just asked me a while ago, what's the best way to get into commercial real estate? Replay this audio and you can go through about 15 minutes in to 23 minutes in. I went over the 7 paths to get involved in real estate, commercial real estate. And those are the 7 best paths that I know of. You've got to choose the one that's right for you. Jeremiah says, recent BiggerPockets podcast was awesome about house hacking. Yes, it was. I'd highly recommend that. Thanks for reminding me of that, Jeremiah. Ryan says, is flipping or renting more dangerous? Honestly, let me just tell you this way. My friend who does flipping and rentals says he has to buy the flip houses cheaper because the rental, he's got 10, 20 years to make up for a small mistake. But if he makes a mistake on the purchase price in flipping, well, he can really end up losing money. So I think that answers the question right there. Joshua says, if you had $100,000 saved up, could you theoretically make a down payment on a property and get passive income immediately? And if so, how? Yes. You could take that $100,000 and divide it up into two $50,000 blocks and buy 2 or maybe 3 duplexes, and you can get past cash flow immediately. Gareth says, love BiggerPockets, even when I don't understand some of your terminology. Sorry about that, Gareth. If you have any specific questions, reach out to me. By the way, I do a Wednesday at noon Eastern call. If you'd like to be on the call just to answer more of your questions, reach out to me at my profile. Sometimes you might be one of only 2 or 3 people on there, and you can get your questions answered on audio, on the phone. You just have to reach out to us at wellingscapital.com/resources or at my BiggerPockets profile. Two Fang says, if we have a recession, how would that affect multifamily and self-storage? 2, it would probably affect the overbuilt self-storage and the brand new buildings and self-storage a lot. It would probably not affect self-storage too bad in general. One of the reasons is because when people downsize in a bad recession, they're actually moving their stuff out of their smaller home or apartment into self-storage for a small relative amount of money. Multifamily usually does pretty well during a recession because people are losing their houses, unfortunately, and they need a place to live. Mobile home parks are the king. They do the best of all. Joshua says, do you know anything about VA home loans? If so, what are the benefits when it comes to real estates for passive income? Joshua, I know they're similar to FHA loans. If you served our country, my hat's off to you. Let's give Joshua a thumbs up, a smile, all that stuff. But no, I think they're similar to an FHA loan, and you probably have to live in a house hack for a while, from what I understand, at least a year. And other than that, I don't think I know anything else. After that year, you can obviously rent it out, and it's great for passive income. Joe says, what are some of the things to look out for when picking a city to buy real estate? You want positive net population migration, a low unemployment rate, a diverse economy. You want to be in a larger city in general, if you can. The larger the city, the better. You want it to be There's about 20 criteria that I look for in finding a multifamily location. If you can reach out to me if you want to get that list of 20 some criteria, just call it market research criteria. Okay, UMO8008 says, great info. What resource do you use to track how prices are changing for certain areas? Any websites or services? There are websites for that. I don't have them off the top of my head. I don't know how to answer that, but there are probably National Realtors Association or something like that, I would say. Hey, Pat from Hungary, thanks for joining us. Gareth from the UK, thanks for joining us. Colosso says, are there any hard money lenders willing to finance 100% a loan? Colosso, I would think there are a few, but you pay a lot for that. So just watch out for that. Okay, we're coming to our last 5 minutes. If you have a question, please fire it off, my friends. Thank you. Thank you for joining us. Okay, Joe says, what are the things to look out when picking a city to buy real estate? I already answered that. Joe says, how do I reach out to you? You can get hold of me at my BiggerPockets profile. Again, it's Wellings Capital, WELLINGS CAPITAL, wellingscapital.com, or Wellings Capital profile, or Paul Moore on my personal profile. So thank you for joining. Andrew, thank you for your kind words. Folks, we're going to wrap it up today. Thank you for joining us here at BiggerPockets. I'm really excited. I can't believe I get to do this. I want to thank my good friend Zach Gwynn. I want to thank Mindy and Allison. And I want to thank all the folks over at BiggerPockets who put on a fantastic conference this week. I really hope that next year, if you didn't make it to the conference, you will get to go next year. So again, thanks to BiggerPockets. Thanks to all of you. We will see you here next week at Real Estate. Let's Chalk Real Estate Investing with Paul Moore. I'm your host. Thanks. Have an awesome, awesome week.